Hello, good morning, everyone. Thank you for tuning in for our this week's research morning call. Today is going to be a relatively lighter session. We don't have that many stock counter updates. We have Avepoint, Hur Holdings, Stoneweg, CapitaLand Investment, and City Developments. And we also have our usual technical analysis. But because Paul is on leave today, so unfortunately we don't have our SG weekly. So yeah, just to flash, this is just a disclaimer. Everything we share is for educational purposes only. So I'll start the ball rolling with our fill on the ground on Avepoint. So Avepoint, we're not covering the stock. So it's not rated. So Avepoint right now, the market cap is around 2.75 billion. It's a company that focuses on data management and data governance. So what they really do is they focus on managing human-generated data. So if you look at the company overall, usually roughly 20% of the data generated is machine-generated. So that includes your CRM, your sales, your Excel sheet, your financials, while the remaining 80% is human-generated. So that includes your voice transcript, your emails, your chats, your call center, and your surveys. So they focus on managing the 80% human-generated data. So the company right now has a very strong annual recurring revenue, which accounts for around 87% of their total revenue. So their revenue is pretty much highly predictable. It's around 327 million in FY24, which grew at a rate of 24% year on year. Their software as a service revenue grew 43% year on year, and their operating margin is relatively high at 14.4% and is growing very steadily. So their ARR contribution is actually very balanced. So very balanced geographically. North America is around 44%, Europe around 35%, APAC is around 25%. So it's very evenly spread out across the globe. In terms of their channel and their direct consumer takes around 45%. Actually, the company started out sourcing their client directly, but once they start moving on to cloud, they start moving on to the channel. They're seeing a lot of like smaller enterprises or SMB actually coming to them. So right now it's also around even out around 55 to 45%. Their consumer segments similar as their channel and direct. Their big enterprises like big players like JP Morgan, it accounts for like 53% of their market. Mid market is around 28%, and SMB is around 19%. Even in terms of industry, it's pretty much very evenly spread out. So one interesting thing that we find about the company is they went in public in 2019 with 60 million private capital and no debt because the company was run by I think two American Asians, so they're like really conservative. So you will never worry about the company going bankruptcy. And even though they have no debt, they have a pretty strong growth around double digit. So that's what we like about the company. So for 2025, the target for the company is they're going to try fitting the rule of 40 and they're going to try to become GAAP profitable. So on the right side, I think the fund is a little bit small. So this is what they view as their potential market. So right now they're on the first sector, which is the current servable market, which they still focus on data replication and protection. So it's like a 90 billion market, and they're slowly trying to move on to the midterm, which they're actually going to do more data integration intelligence. So that adds in another 10 billion of their market share. And the last one is in the long term, what they aim to achieve is to literally expand it onto the cloud. So they're going to do like security analytics and identify and access management and all the cloud native applications. So that potentially is going to be a really big market for them. So that's all for Avepoint. I'll pass my time to Darren to talk about WeHeard.
Yeah, thanks, Helena. Yeah, so I'll now talk about WeHer. So WeHer is actually covered by Iqban, but he's on leave today, so I helped him run through his slides for him. Yeah, so for WeHer's results, the FY24 revenue and PATMI were below Iqban's expectations, or rather were below our expectations. That's mainly because there was a slowdown in the building construction segment as tenders remain competitive and order book is also fell 21% from June 2024. Yeah, so for the positives for these year's results, the worker dorm will drive revenue and profit growth. Yeah, so we saw the worker dorms segment of revenue and profit. It rose 25% and 21% year-on-year respectively in the second half of 24. So that's mainly driven by increase in rental rates. Yeah, the new worker dormitory, Pioneer Lodge, is about 10.5K beds, and it's expected to be partially operational in the second half rather in the second quarter of 2025, and you expect it to be fully operational by the end of 2025. So the increase in this bed capacity will increase this worker dorm segment and profits. We expect it to increase by about 10% from these new beds, new operational beds. Yeah, we heard also they have about 300 million on net proceeds, which is expected by the first half of this year. So that is for the sale of the stake in the PBSA asset. Yeah, so the net gain is about 37 million. And yeah, the proceeds will likely be received by first half of this year. So we are expecting a special dividend of about 20% of the net proceeds. So that equates to about 6.5 dividends per share, which will be distributed as special dividends. So that is our assumptions. We hope they will hold still about 126 million of cash net. They'll still have 126 million net cash position post the distribution. Yeah, so for them, their book value also per share it rose by 7.5 year-on-year. So they're currently trading, WeHer is currently trading about 60% discount to its book value per share of about 71 cents. So as WeHer, they can monetize the remaining PBSA assets, and the fund, we expect the discount to narrow. Yep, and for the negatives, the construction segment, there's seen a slowdown. So the construction segment, the second half performance, the revenue and operating profit, it dropped 7% and 19% year-on-year. Yeah, so as you can see that in the graphs. So compared to June, the order book dropped 21% as of December 2024. So the tenders, it is guided that the tenders will remain competitive, and because of that, we expect the construction segment's revenue and profits to start to moderate in 2025. Yeah, and there are some slight delays in the new worker dormitories. So the ramp up was slower than expected. So this Pioneer Lodge that I mentioned earlier, so it experienced a slight delay. It was supposed to be partially operational by first quarter, but now it's been pushed back to the second quarter. So because of that, we have adjusted our WACC assumption slightly to 13.7%. Yeah, so for the outlook, the net proceeds, they will hand out, we expect we have to hand out special dividends, so that will be about 76% of WeHer's market cap. So that will be, WeHer will still be net cash after distributing these special dividends. And of course, the extra 10.5K beds at Pioneer Lodge will help to drive revenue and profits for FY25. And yeah, like I mentioned, also the construction segment is slowing from the competitiveness of the new orders and low order book. Yeah, so with that, we maintain a buy call with an unchanged target price of 62 cents using SOTP. Yeah, so we've adjusted some of our valuations. Yeah, so like RNAV, we now use 20%, and we adjust our WACC higher. So kind of offset each other, and as a result, the SOTP remains the same. Yeah, so that's all for WeHer. Yeah, move on to Stoneweg. So Stoneweg, they didn't have any updates. This is actually the FY24 update. So together with CLI and CDL. Yeah, I'm only updating now because I was away on service, so there's some slight delay in the report publishing, and these are my updated numbers. Yeah, so for Stoneweg European REIT, the results were in line with our expectations. So the DPU of 14 cents translates to a distribution yield in FY24 of about 10%. Yeah, so the DPU it dropped year on year. That's mainly because of the lower contribution due to the absence of contribution from the divestments that they made to keep their gearing within 40%, as well as some slightly higher all-in interest costs. Yeah, so for the positives, Stoneweg, they managed to maintain a positive rent reversion. So it's FY34 it had 2.8% with a long WALE of 5.1%. So just to recall that Stoneweg, there are leases that are tagged to CPI. So most of the leases are tagged to CPI. So they benefit from the annual indexation. And sorry, excuse me. Yeah, so Stoneweg, the positive rental reversion was driven by the light industrial and logistics segment, so it grew 4.9% year on year. For the office segment, it was rather flattish. Yeah, but the positive for them is that their portfolio is still currently under rented by about 8% compared to market rents. So this shows that they still do have potential to for some more positive rent reversions when the leases are repriced to market. Yep, another positive is that during in first quarter 2025, or rather in January 2025, they issued a 500 million euro 6-year green bond at a coupon rate of 4.25. So after issuing this bond, they are using the proceeds to refinance or to repay off the debt that's due in November 2025. So that the November one was a 450 million euro bond, and the November bond has a coupon rate of 2.125%. So that's compares to the new issue at 4.25. So because of that, we expect the all-in cost of debt to increase to about 4% in FY 2025. So in FY 2024, it's about 3.2%. Yep, and right now 89% of debt is hedged to a fixed rate, and the gearing is still remains healthy at 41%. Yeah, so after this refinancing, or rather after this issue, Stoneweg does not have any loans that are due for refinancing until fourth quarter of 2026. So now they can move on to their next phase of growth, which is tapping on the sponsors pipeline for acquisitions. Yeah, so another positive that we see is that there was a slight improvement in portfolio valuations, and we saw cap rates stabilizing from the low interest rates already. So it was up 0.8% on like-for-like basis. So the valuations was driven by a 4.5% increase in the logistics and light industrial segment. So the office portfolio saw a 3.5% decline. So that's mainly due to the weaker Finnish portfolio. Yep, and with lower interest rates and possibly more interest rates to come from ECB cutting rates. Yeah, we expect portfolio values to improve some more this year. Yeah, and for negatives is just that the portfolio occupancy it dipped slightly quarter on quarter. So now it's at 93.5%. It's still high. Yeah, that's mainly due to transitional vacancy, as at the end of last year there was a tenant which vacated France. So Stoneweg is now currently making good progress in leasing out the vacant spaces amid strong leasing activity. Yeah, so for the outlook, Stoneweg is still poised to capitalize on structural trends such as nearshoring and e-commerce growth, and they also benefit from more ECB rate cuts. So ECB rate cuts will benefit from the lower interest expense from the floating portion, as well as the valuations that are likely to increase from compressing cap rates. And they are now well positioned to leverage the sponsors pipeline for strategic acquisitions and inorganic growth. So that's the new sponsors pipeline. So with that, no change to our target, no change to our call, our recommendation. We maintain buy, but we lower our target price to €1.86. So that is due to the fact that we roll over our forecast. And despite the so-called decline in DPU from the higher interest expense, Stoneweg is still paying a forecasted dividend of about 9.5%, and they're trading at about 0.7 times price to NAV. So we think these metrics are attractive. Yep, so that's all for Stoneweg. I'll move on to the next one, CLI. Yeah, so CLI, they had their results a couple of weeks back as well. So their results were under our expectations. But if you strip out the revaluation losses of 261 million, the results were more in line. And this 261 million revaluation losses were basically 57% lower than FY 2023's 600 million revaluation losses. Yeah, and CLI, they have also declared a final dividend of 12 cents and a special dividend in specie of 0.031 CICT units per share. So that is valued at 6 cents. So in total, the DPS is 18 cents. So that translates to an FY24 dividend yield of about 7%. And they also revised their dividend payout policy to 50%, to a minimum 50% of cash PATMI. So that is an increase from 30% previously, and that is to enhance the shareholder return. Yeah, so for the key highlights for this update is that they made some strategic divestments to streamline the balance sheet and lower the balance sheet assets to make the business more asset light and more FR or fee uh recurring fee business. And they made about 5.5 billion in divestments in FY24. So that basically halves its balance sheet from about 8.6 billion to 4.3 billion. So as a result, they have the dry powder for more acquisitions to expand the fee or fund management platform. Yep, and they're also shifting towards the recurring FR fee-driven earnings. So we saw 62% of operating PATMI came from recurring fees as compared to FY23 of 54%. Yeah, CLI, they still have about 3 billion of China assets on the balance sheet that are stated for divestment. And it also made 5.4 billion of investments in FY24. So this basically highlights CLI's ability to redeploy this divestment proceeds into higher conviction themes to drive growth, mainly in the funds business. Yep, and another highlight is that the FRB continues to drive growth. So FRB, it's the revenue in FY24, it grew by 9.3%. So we saw growth across all segments like listed funds management, P fund management, commercial management, and lodging management all saw growths. Yep, and we noted that the event-driven fees under the fund management platform is surged 79%. So that's mainly from more transactions happening, and CICT's acquisition of Ion Orchard as well has had a part to play in that. Yeah, so CLI for 2025 this year, they plan to grow the FUM by at least 5% organically. So that is similar to FY24's 5% growth. In FY24, it had about 13 billion of inorganic growth through acquisitions as well. Yeah, so if they continue on this track, they are highly likely to hit their 200 billion FUM target by 2028 also. And for the lodging business, it recorded a record 11.7K units opened. So that is an improvement from 9.6K units opened in 2023. And they also had a record 15,000 new units signed in FY 2024. Yeah, so all this will help to generate more fees under the lodging management business also. So yeah, the FRB business continues to improve. And for the outlook, we expect more event-driven fees from the listed and private funds platform to pick up as well in FY25 from more transactions as market conditions continues to improve, like more demand as well, and perhaps a softer interest rate outlook. So all this might help to drive transactions. The lodging management fees continues to improve in more units opened. And right now in FY24, RevPAR grew 6%. So we expect similar mid-single digit type of RevPAR in growth in FY25 also. Yep. Operating conditions in China remains challenging. We saw some negative reversions across the board in China. So CLI, they're still planning to divest. They still have about 3 billion of assets in China, so they're planning to divest some of that. But the pace of divestments is not really a key priority now. So now the focus is more on growth, expanding the FRE business and acquiring more, perhaps making more M&As and new fund launches to drive this FAM growth. So right now, their debt to equity ratio is very low at 0.39 times. So because of that, they have more capacity for acquisitions to reach this FAM target. Yeah, so with that, we maintain our buy call with a higher target price of $3.65. And CLI, they are paying a forward dividend yield of about 4.6%. That's based on 12 cents in FY25. So we are forecasting a final dividend of 12 cents. And yeah, so that's for update for CLI. Yeah, I'll now move on to CDL, an update on CDL. Yeah, so for CDL, our titles Road to Recovery. So just some key highlights, a very high level, top level highlights. There there are numbers that the FY24 PATMI was below expectations. So that's mainly due to the timing of the profit recognition under the property development segment and 21% rise in interest rates. So just to note that in FY24 we saw a 34% decline in revenue from FY23. So FY23 saw a record profit, but that's mainly because in FY23 it included the full recognition of the EZ project Piedmont Grand, as well as the sale of a Shirokane land site in Japan. So all that helped to boost the gross revenue. So we saw a year-on-year decline. Yeah, we straight that out. It doesn't look that bad. Yeah, but on the top line, it looks like it declined a lot. Yeah, so for the key highlights, we saw some strong sales momentum for Singapore development projects. The ORI, which was launched in the first half of 2025, or rather in Jan, it saw a take-up rate on over the launch weekend of 86%. So right now, the take-up rate to date is about 88%. So that was at an average selling price about 2,700 PSF. Yep. Other launches that they had in 2024 continues to sell well. So Norwood Grand, Cassia, Union Square Residences, and Lumina Grand. So all those had a good sell-through rate. So as a result, they had a total sales value of about 3 billion, with 1.5 units sold in FY24 compared to about 1.5 billion and 730 units sold in FY23. Yeah, so going forward, the group plans to launch the integrated mixed-use development at Zion Road. So that's in the first half of, or rather in the second half of 2025. So that features two towers with about 700 residential units, a retail podium, and some service apartments as well. So the group still has one more ultra luxurious project, which is Newport Residences. So they are continuing to monitor market conditions for the launch of that. But in our view, is still challenging, especially since the 60% ABSC for foreigners is still in place. So as a result, the foreign demand has all vanished already. Yep. So the next highlight is that CDL, they are planning to grow their recurring income streams. So the revenue from the investment property segment it grew by 11%. So that's mainly driven by the acquisition of St. Catherine Dock. So that's a full year contribution in London, as well as several other living sector properties or private rented sector assets in Tokyo and Osaka. So all these are considered the recurring income streams. And for the investment business as well, the group Singapore office and retail portfolio remains very, very resilient. So they had an occupancy of about 98% for both Singapore office and retail. So those are still resilient. And for the hospitality sector, we still see some positive momentum. So in FY24, CDL, they posted a slight increase in profit before tax in this sector. So a 2.6 increase, and that's mainly due to a 2.6 increase in RevPAR and a 0.5% increase in the gross operating profit margin. So going forward, we expect around similar levels of growth in the hospitality sector. And another highlight for them is that they have a high net gearing. Their net gearing, it rose from the recent acquisitions that they made. So now their gearing on fair value of investment properties has risen to 69%. So previously it was 61% in FY23. And the ICR for them now, it has decreased to 2.1 times. So in FY23 was 2.8 times. Yeah, however, they still remain fairly liquid with $2.8 billion in cash. So they have higher gearing, they have to pay more interest expense. So we are also forecasting that into our model this year. Yeah, so for the outlook, we do see some green shoots emerging from the Singapore property market. So especially since there were some high take-up rates in fourth quarter last year as well as the ORI. So because of that, we are optimistic on the Zion Road project, which is going to be launched in the second half this year, even though the buyers are still mostly Singaporeans and PRs, and the 60% ABSD continues to deter foreigners. Yeah, we're also expecting low to mid single digit growth, RevPAR growth in FY25 across the group's hotel portfolio. And for CDL, capital recycling remains a key priority. So they do have some directions planned across several assets. classes and geographies, and all these divestments could help to lower gearing. So just to recap, CDL, they had a 1 billion divestment target for 2024, but they missed that target, so they achieved just 600 million in divestments in Singapore, Suzhou, and London. Yeah, so with that, we maintain our buy call, but we lower our target price to $6.02. So that's a 45% discount to our RNAV of a 10.95, $10.95. So CDL, they paid a full year dividend of 10 cents. So they had a final dividend of 8 cents, bringing the total full year dividend to 10 cents. So that is a dividend yield of only 2%. Yep. That's all for me. I have no time now to sing to talk about technical stacks.
Thanks, Darren. Good morning, everyone. I'll move on to the technicals. Next slide, please. Yeah. So first up on the S&P 500. Last week we saw a fourth consecutive week of loss. And also on Thursday it closed inside the correction territory, which was down 10% from the 52-week high. So I think currently it's doing a bit of a sideways from Tuesday. If you hold the 5,500 lows last week, I think we could see some slight rebound this week to do a retest of the 200-day MA, which is the purple line in the chart, as well as a breakdown of the trend channel in blue. So for now, the resistance is likely to be at 5,730 to 5,860 and support at 5,400 to 5,560 area. Next slide. Yeah, so speaking about corrections, we did a slide on to look at past corrections and some of the forward S&P 500 returns. So this correction is quite interesting because it's one of the fastest corrections that we ever seen. It's ranked actually quite third in terms of history. So it just took 16 days to reach correction from 19 Feb to the 13 March lows last week. So historically speaking, the 1 month to the 12-month returns following correction, we have generally seen positive returns, positive S&P 500 returns, following which 1 month return is at 1.1%, 3-month returns is 6.7%, 6-month returns is at 15.1%, and 12-month returns is at 17%. So this regarding the fast type of corrections. And also something interesting to take note would be that under the Trump administration, we actually saw 3 of these fast corrections actually occur. First one was during the fastest one was during the COVID 2020, and then the second one was during the first trade war in 2018, and currently the third rank is the one where we are in right now in 2025. Next slide. Yeah, then next one is just looking at normal corrections. When we look at the past 10 normal corrections, so these are the 1 month to 12-month returns. So normally you on average 1 month returns is about negative 1% with a 50% chance of it being a positive. 3-month returns is usually 4.5% with a 70% chance of being positive. And then when you stretch the time frame longer at 6 months, it's about 80% positive and 7.9% average returns. And 1 year later is usually 90% positive with about 15.3% returns. Yeah, so this is just looking at the forward returns after a correction in the past 10 instances. Yeah. Next slide. Yeah, so we also have a technical report on the Singapore banks. So in terms of the chart wise, and when you look at the weekly chart, there's a breakdown in terms of the Singapore banks. So first up for DBS Group, we have a technical sell at $44.23. Take profit levels $37 and $32 respectively, with a stop loss at $46.85. Last close was $44.25 on Friday. So looking in terms of DBS weekly chart, there was a breakdown of this uptrend channel it was trading in the blue channel over here last week. So it has been trading in this channel since November of last year, and there was a breakdown coupled with a bearish divergence and bearish crossover on MACD, which could signal some decreasing momentum going ahead. And also when look at in terms of the deviation from the long-term 200-day SMA, also it hit the 50 deviation level, which historically when I look at 2018 as well as 2022, these were some extreme levels that price actually did a mean reversion from towards the where it came down towards the longer term supports like the 100 and 200 SMA levels, which are the green line and purple line in the chart. Next slide. Next one is a technical sell for UOB, $37.35. Take profit levels $32 and $28 respectively. Stop loss at $39.20, and the last close was $36.71 on Friday. So in the weekly chart, there was also a breakdown of this rising wedge formation in blue over here, which price actually traded in since November last year, and then there was a breakdown last week. Also, this came on the back of bearish divergence and bearish crossover at MACD. Also, in terms of the deviations from the 200-day SMA, hit the 40 deviation mark, which historically 2018 and 2022 was the highs as well, where price actually did a pullback from towards the longer term 100 and 200 SMA levels. Next slide. Last one is for OCBC, technical sell at $16.69, take profit levels at $14.80 as well as $13.40, stop loss at $17.93. Last close was $16.48 on Friday. So OCBC is similar. There was a breakdown of this uptrend channel it was trading in since November, and also bearish crossover on the MACD, and also it hit the 40 deviation level from the 200 SMA lab, which were highs in 2018 as well as 2022, where price subsequently pulled back towards the longer term moving averages. Yeah. Next slide. Yeah, so this is a summary of the trades initiated last week for the three banks. So for this, it's more of a longer term time frame. We are looking at 26 to 104 weeks, which is about half year to 2-year period. So currently, DBS is down slightly 0.05%, UOB is up 1.7%, and OCBC is up 1.2%. Yeah, so that's all from me. I think we can move on to Q&A. Thanks.
Okay, I guess I'll start the ball rolling. So there was one question, Helena, on Avepoint. Can you share who are the other companies that have a similar business and model like them? Any idea where they stand in competition? So of course, when it comes to data, there's definitely a lot of players in the field. So to name a few, their competitors include VM, Commvault, Java. So all these data protection companies that are very proficient in data backup. So I guess what sets them apart is the first is they have very long-standing collaboration with Microsoft. So they actually offer a lot of tailored solution that enhances Microsoft 365's building capabilities. So that kind of set them apart. And the second, I guess it's also they recently start relying really heavily on channel partners. So that really helps them to expand its reach to a lot of the small enterprises. Because when they started off, they actually only work with big players, but now they're reaching out, and that sector has been growing very tremendously. Now it's already overtaking their direct partner. It's around 55% of their overall consumers. So yeah, I guess these two are the ones that set them apart. But you're right, there are a lot of players in the field. So I hope that answers your question. I guess I'll pass my time to, I don't know, Darren.
Yeah, thanks, Helena. Yeah, so I'll run through some updates. Will CLI be incurring loss from their China divestments? If yes, what is the impact, and will it be offset from the Ion acquisition? Yeah, so the Ion acquisition was done and completed last year. CLI, they did divest quite a sizable amount, 5.5 billion last year or so, and that was at about a 5% premium to valuations. So they still have about 3 billion to 3.5 of China assets on their portfolio, or rather in their balance sheet. So it's highly likely that they do not want to sell these Chinese assets at a big discount to valuation. So which is why they are holding on a balance sheet for now, even though they still have the intention to divest those if they can get a good price. Yeah, so yeah, I think to answer your question, basically last year they had a 5%, they divested a 5% premium. So yeah, they will have some they did have some revaluation losses, but they did not really have any loss from divesting their China assets. Yeah, so hope that answers that CLI question. Any thoughts and outlook on CDL Hospitality Trust? Will the recent CDL family fail have any impact on CDL Hospitality Trust share price and dividends going forward? Yeah, so for the CDL family food saga, with any impact on the share price, so that one I can't really comment for CDL HT, but for dividends going forward, because CDL HT is still classified as a REIT, so they still have to pay 90% of their distributable income. So as a result, basically it will not really the family feud per se will not really affect the dividends for CDL Hospitality Trust. Yeah, so for the thoughts and outlook, for CDL HT, there's in Singapore we do see some new supply and oversupply kind of situation of hotel rooms in Singapore, so that might hurt CDL HT. But CDL HT are now focusing more on acquisitions to drive growth to offset this flattish RevPAR performance expected in Singapore hotels as also. Yeah, so that is roughly the outlook that I have for CDL HT. Yeah, one more thing to add for CDL HT is that they are a top beneficiary for any interest rate cuts, as their hedging ratio is very low. If I remember correctly, it's 40% or around there. Yeah, so they'll benefit from any potential interest rate cuts from the floating portion of their interest. For Mapletree Lot, why is the REIT not divesting its China assets, but the REIT is divesting its other assets? Example, the Penjuru Lane asset that was divested. Shouldn't China assets, being the lower performing assets, be divested instead? Yeah, so China assets, they have some issue there. It's not performing very well. So we've seen negative double-digit reversions for the past few quarters, and we expect that to continue for at least one or two more quarters. After that, it will start to normalize to a low single-digit reversion. So you're right that China assets are not performing well, and about divesting these Chinese assets, because they are not performing well, there are also a lack of buyers. So if any divestments are to be made, it could, I mean, not really a distressed sale, but it'll likely, any buyer will only want to buy or purchase all these non-performing assets at a steep discount to valuation. So that is not what Mapletree Logistics that wants to do for sure. So we saw like recently they divested their other assets like the Penjuru Lane. So that was at I think if I remember correctly, it was a 6% premium to valuations. So it would be unlikely that Mapletree will want to sell any of their China assets at a steep discount to valuation. So which is why they are not really divesting their China assets. Yeah. Yeah, hope that answers that. But in my view, if they can divest any of these assets at a premium to valuation, or at least at valuation, we think they would do that. They will likely do that because of the fact that basically the underlying operating performance in these Chinese assets are not doing too great. Yeah. CityDev has net gearing of 69%. What would you consider a safe level of gearing for such a business? Yeah, I'll consider about a 40 to 60% range gearing to be healthy for growth and managing liquidity and any risk and high interest rates as well. So 69% is relatively high. Yeah. Yeah, let me get back on the value of the land bank again. I can't remember off the top of my head. On CLI, I do not see that they distribute dividend. How does a 4% dividend be paid? Yeah, so CLI, they have proposed a 12 cents dividend, so that has to be approved by the AGM, if I remember correctly. So there'll be some delay, and that is together with the CICT dividend in specie as well. FRB is fee-related business, so that is from the lodging management, commercial management fees, private fund management fees, and listed fund management fees. So that is fee-related business. That is FRB. Analysts have been saying Singapore REITs are worth looking for past 3 months, but yet most Singapore REITs are still sliding down even with good dividend yields. And that also there's another question also similar. Please comment on the outlook for S-REITs in the next 3 to 6 months. Yeah, so in the near term, S-REITs are always very volatile, and that is mainly dependent on the interest rate cuts trajectory. So right now, the markets, rather the futures market seems to be pricing in a little bit more, more, I think 3 rate cuts from what I last saw. At some point earlier this year, the market wasn't pricing any rate cuts at all. So now, with 3 potential rate cuts, 2 to 3 rate cuts, yeah, the story for REITs is looking better. As you all know, lower interest rates, definitely the REITs will benefit a couple of ways. So one of it is lower interest expense. Another is cap rates will start to compress from low interest rates. You do see some increase in property valuations. So higher valuations as well will benefit the REITs, and also with low interest rates, the dividend yield spread that we see over the 10-year bond. So we saw the bond yields already come down. So with that, the yield spread will also increase. So that is still beneficial. So basically for the outlook over the next 3 to 6 months, we think in the near term, share price will still be volatile based on the probably the share price will still be volatile mainly on the trajectory of the interest rate cuts, but the operating performance for most REITs remains stable. Yeah, so yeah, that is our near-term outlook. There will likely 1, 2 rate cuts. Yeah. Yeah, I think I'll hand over to my colleagues for now first.
We cover some good question. Sorry. Any update on Zixing? You should provide regular updates on the stocks you have initiated. Yeah. So the company never updates. We can only update our investor once the company update the market. Otherwise, everything will just be status quo. And the latest update about Zixing is they have a new revenue stream, which is transferring agricultural waste like sweet potato peels and stems into livestock for animal feed. And they secured the first order valued at 3.2 million RMB. It's around to 600,000 thing. Yeah, and we expect the customer base to expand rapidly in the upcoming financial year, and projected sales to be around 30 million RMB. And there's a question on sets. Is our team still holding conviction on STP around 4.05? We do believe FY25 performance will still be robust, and it wouldn't really affect much by the tariff thing. And we already trimmed down the FY26 PATMI forecast by around 10%. And the new target price actually reflected the change.
Yeah, and SaaS is actively collaborating with their customers to establish like additional stations outside of US to adapt the trend. And yesterday they just signed a MOU with Vietnam Airline yesterday to build and operate the air cargo terminal in its international airport. Yeah, so we believe like they are navigating the new environment. And since like tariff is more of like a global thing, not only like to China, and it doesn't affect US only. Yeah, but like said, 25% of the revenue actually contributed by the US cargo handling side. Yeah, so I do believe FY26 PATME would be impacted by the tariff issue. Yeah, hope it answers your question. I'll hand over to Glenn. Yeah, thank you.
Hey, thanks, Mel. Yeah. Yeah, so a few questions on the banks. Just let me look at it again. Sorry, give me a minute. Where is it? Yeah, so first one is what is the outlook on the banks in view of talks of more potential or potentially more rate cuts in the second half with the recent easing of inflation? Yeah, that's a good question. You know, the rate cuts, like this, the expectation of rate cuts keeps moving up and down, right? So, one day they can say no rate cuts, and now they're saying 3 rate cuts. Then maybe the next month they'll just say, oh, okay, back to 2 rate cuts. So it's really very hard to predict and, base the outlook on just solely on the rate cuts. So we'll just take, our view is that we're looking at around 2 to 3 rate cuts for this year. So based on that, that we are believe that the banks can still hold well, even though even if you look at their the most sensitive part of the banks would be to rates would be the net interest income and net interest margins. So based on that, we believe that the banks will be able to hold stable for these two portions, net interest income and net interest margins. But for the growth wise, where we could be coming from, it will be really from their fee income and also trading income if the volatility remains high, right? So trading income will continue to be strong with the high volatility, and also fee income will continue to perform well, as rates, even if rates don't go down or go down more, then it's even more beneficial for the banks because investor sentiment will shift from low interest, low risk kind of fixed deposits or products to higher interest earning products, which will earn also a higher interest margin for the banks, and then that will be beneficial for their fee income. So apart from that, for the banks, I think there's another question I saw also, asking about what is the outlook for the banks, the fundamental view. Apart from those two things that I've spoken about, we also believe that the banks have substantial or at least enough coverage and management overlay to maintain their credit costs as well as to maintain provisions at the levels that they have guided. So it's quite healthy. I think it's still around or below the pre-pandemic levels, so that's good. And that the thing about the management overlay is that if specific provisions or specific allowances come in too high, they will be able to release some of these general provisions from their management overlay in order to sort of lower the whole provision level and also maintain their credit costs. So that's why we believe that they will be able to meet what they have guided in terms of credit costs. Yeah. So that's for apart from that, that's all for the banks. But then again, what we are really looking at the banks, it's for DBS, we'll probably not see any growth for 2025 in terms of the earnings, the bottom line, really mainly due to the global minimum tax that they will have an impact of around 400 million, which is why if you compare year on year 2025 2024, they won't really have any growth. So DBS is really affected by this the most because previously they were able to get a lot of tax rebates as well as tax incentives in Singapore. So their effective tax rate was only around 11 to 12%, right? So now that if they push it up to 15%, that will really hurt them. For the other two banks, they're not so much affected by this, is because they don't really get as many tax incentives or rebates. So their tax average tax rates around 14, mid 14 to 15%. So it won't really make much of a difference to them. For OCBC wise, we also feel that the growth is will slow down in 2025, mainly due to we believe that their net interest margins will dip a bit more, right? Due to how they really manage their net interest income. So and also loans growth will come in slightly weaker than expected. But we do believe that UOB, which is our pick for the banks, will show double-digit growth, really due to the fact that they are now concentrating and trying to diversify, firstly out of Singapore and also out of what they were previously known for, which is the SME, commercial banking kind of bank. But now they're really focusing on fee income, trading income, and especially and also not in Singapore, in the ASEAN countries, which are all still developing, and there's a lot more room and space to grow because Singapore is really so saturated market for banks. Yeah. I think there's also I saw another question on the hold on, let me look for it. Yeah, someone also asked about but let me just read out this question. Yeah. So I think there's two of these questions which are quite sort of related. I think Zane was going through his slides on the banks, and he gave a technical sell on the 3 Singapore banks. But for the fundamental side, we have an accumulate for both for actually all 3 banks, right? So the target price for the fundamental for us for fundamental wise would be 46.90 for DBS, 41.80 for UOB, and 18.90 for OCBC. Yeah. And I think I talked about my views already. Yeah, so that's fine. Yeah. Someone's asking if you could flash the slides for the banks if you had given a presentation on them earlier. Yeah. Helena, could you move back to that slide? Thanks. I think it's Zane's slide, yeah. Any more for me? Yeah, so this is the other related question which asked, analysts were previously saying local banks target prices still about 10% from their current prices, but you're calling for lower levels. Any reason that any good reason given that banks' profits are still looking good and dividends still respectable? Yeah, so our fundamental target price is still around there, around 10 to 15% above their current prices. Yeah, maybe yeah, I'm not sure if if we have time, Zane can just go through the why he has a sell on the banks. Yeah, but so it's really a technical view versus a fundamental view. Yeah, that's the main difference. Oh yeah, last one for me here is iFAST has been on a retreat after a good earnings report. Any commentaries? Yeah, so iFAST is interesting because they are moving away from being just solely a wealth management platform, right? They are really focusing on a bank. So it's the opposite of what a bank does. Bank will just do the main like a main bank business, which is taking in deposits and then lending it out and then earning the net interest income. And then after they have settled that, they move to doing fee income wealth management. But for iFAST, they did wealth management first, fee income, and then now they bought a bank, and then they're trying to take in deposits, and then eventually I think they're doing more lending out, and that's how they'll be getting their interest margin. Yeah, so I think for iFAST, initially it was quite positive because they finally turned around the global bank, right, and they made a profit. But I think it's not proven yet how much they can really earn from this bank. So this seems to be the main driver for them. It's not really the Hong Kong e-pension because that has been priced in already. So we're looking at this iFAST Global Bank. So the growth potential is still unproven, right? We are not sure how much can they grow, right? They're saying that it's possible they are taking up a space where the existing digital banks and existing traditional banks do not want to go into, right? But it's if they grow too big, what will happen, right? The digital banks, which in the UK are very big, and as well as the traditional banks, might just say, okay, I want to do what they're doing as well, and then they will step in, and what will happen to the iFAST Global Bank? So it's really unproven, so nobody knows. So it's a bit of a higher risk if you're looking at iFAST. Yeah, that's why it has been on a slight retreat. I guess some investors are trying to take profit first while waiting for more results. Maybe the next quarter and the next 2 quarters will really show if the trajectory of the banking side and how fast will it be growing. Yeah. Yeah, there's one on the HSBC Hong Kong SDR. Let me go and double check on that. I'm not really sure. Yeah, for that one. Let me go and double check on that, then I'll let you know. Yeah, I think that's all for me. Let me hand it over to the rest of my colleagues. Yeah. If Zain can, maybe you could just repeat the part on the banks. Yeah. Thanks.
Yeah, sorry, Zain, let me do some quick one to clear up some of the questions. Thanks. Yeah, what is the current size and value of the land bank for City Dev? I think that's a follow-up to the earlier question that I answered. Current size, you mean of the loans is about 13 billion and the land bank is about 2 to 3 billion. The CapitaLand REITs uptrend, but not others. Is this move sustainable? Yeah, I think that one is you're asking on TA, so I'll leave that to Zain. Any updates on AIM-CPAT REIT, please? Yeah, so AIM-CPAT REIT, basically no update since the FY24. It's just that they will be issuing a PERP. So this PERP is a proposed issue of 4.7% coupon PERP. So this will be used to refinance the PERP that will be due in 20 August 14, 2025. So the current PERP that AIM-CPAT REIT is of the same value, so 125 million. So the current rate is 5.65% coupon. So if they reset that PERP, we will definitely be at a higher rate because higher spread and from higher base rate. So as a result, they issued a new PERP. So the new PERP will be at a 4.7% rate. So basically, they will have some interest savings from that front. Yeah, so that's the latest update for AIM-CPAT REIT. Yeah, so how do you view RTS completion impact on FCT? Yeah, so the RTS impact on FCT, actually, we view it as a good thing. So first of all, for Singaporeans going to shop in Malaysia or JB, we think those Singaporeans who are ready, or rather who intend to shop in JB in the future after the RTS completed, we don't think there'll be many more people going there as compared to those who are already going there. Let me try to say that again. Yeah, so those Singaporeans who are shopping in JB currently will likely maintain, but we don't think there'll be many more Singaporeans that will be going to shop in JB just because of the RTS. So we think those who are already going to spend there have already spent there. But on the flip side, Malaysians coming to work in Singapore, we think likely there'll be more Malaysians coming to work in Singapore, and that will help with the spending in FCT, especially those suburban malls with like F&B. So definitely when the Malaysians from JB, they come to work, definitely they will need to eat. So FCT, their malls are well located in suburban like near areas, so near MRTs and such. So definitely these Malaysians, when they work here, they will have to eat. So likely at a bare minimum case, the F&B will perform well, or rather we have more customers. Yeah, so yeah, it's still really hard to say, but that is my current fundamental view from the RTS completion, how it will affect retail in Singapore. Yeah, basically what I'm trying to say is those Singaporeans who are already intending to spend, or rather to buy stuff in JB, they are already doing so, and not many more Singaporeans will go to JB just because of the RTS for those who are not already doing so. Yeah. Hope that answers the question. Yeah, please comment on Capital DC fundamentally and TA. So yeah, so TA I'll leave to Zain, of course. Fundamentally, Capital DC, we still do expect some very solid positive rent reversions in Singapore. SGP4, if I remember off the top of my head, it's SGP4, so their lease is expiring this year. So we're expecting also similar-ish 30-40% rent reversion for that. So that is strong. Other geographies that are not performing too well, but maybe a flattish rental reversion. But for Singapore, we are co-location, we're expecting 30-40%. So that accounts for a lot of the renewals in this year. So and Singapore now accounts after the acquisition of SGP 7 and 8. Singapore now accounts for 65%. So that is a good sign. But there are still some headwinds, I would say, from the new issue of the equity fundraising that was done last year. So as a result, there were 20% new shares. So we've seen the share price not perform so well recently. We think that's because of a lot of the selling that happened from the new issued units. And one more thing is that China is still not receiving any income. It's basically the Chinese tenant is still owing money. If KDC is able to get back or rather collect the income from there, that would be a huge plus. But in the meantime, it still doesn't seem unlikely. Yeah, so that is still a negative point for Capital DC as well. CapitaLand Ascott Trust, why is the share price so lackluster? For Class, I think the outlook for RevPAR growth definitely has slowed. So Class, our target price is $1.05. So that is quite some upside from here. But basically for Class, they have been doing some very strong capital recycling. So divesting assets that have already reached a mature stage and they're paying a yield or a low yield. So they're divesting those at a very low cap rate and acquiring assets at a higher yield. We saw some good examples last year with the Citadines and Life Funan acquisition. Yeah, so basically, in my view, why the share price performed lackluster, mainly first of all is macro, and also the fact that the RevPAR growth the growth prospects has really slowed from 2024. So the market is a little bit more cautious in investing in hospitality sector for now. That's my personal view. But like for example, in Singapore, the RevPAR starting to slow, so maybe low to mid single digit RevPAR growth. But the good thing about Ascott is that they are geographically diversified. So their assets in Japan are still performing very well, so that can help to offset a little bit of weakness in Singapore. But having said that, Singapore they still have some bright sparks. Like we saw last week, Lady Gaga was announced, and that is also similar to the Taylor Swift saga, where it's only a exclusive was it Asia or Southeast Asia concert? I can't remember the details here, but it's basically she's performing exclusively in Singapore in the region, so that will really help to drive tourism and some hotel RevPAR as well for that period, as we saw during the Taylor Swift and Coldplay last year. Yeah, so there are some bright spots as well. Yeah, so target price is $1.05 and we have a buy recommendation. Yeah, thanks. So I think that's all. I hand over time to Zain now. Thanks.
Wait, give me sorry, one last question. My bad. Sorry. Yeah, there's one on the GE, so just let me clear this up before I hand it over to Zain. Yeah, not really any updates, but I think they currently have around just below 94%. So they managed to buy, a lot of the, quite a few of the minority shareholders did accept their previous offer. So that offer has closed, the one where they gave $25.60. So what we are hearing from OCBC is that if they do give a higher offer the next round, if they do, right, the previous investors, GE shareholders who accepted the $25.60 will not be able to they basically won't get more money from if they give a higher offer. Yeah. So that is the main, I guess, the main highlight. So those who accepted already, just you just take that $25.60 and just call it sort of a done deal. Yeah. So they currently have around below 94%. They still need a fair ways to go, right? They need to get more than 98.8% in order to make it to privatize and have a compulsory acquisition of Great Eastern, right? So they are still in talks with. The latest news is that they're just in talks with the group of minority shareholders which are holding out. I think they have around 3% of Great Eastern. So I think they really do need to turn that largest minority shareholder in order to be able to privatize it. But they did extend SGX did give them that extension until May, right, of this year. So they have about maybe 1.5, 2 months before they need to make a decision whether they are going to restore the free float or raise their offer price in order to those minority shareholders can accept. Yeah, so not really not much of an update for GE. Yeah. Okay, hand it over to Paul is on leave, so we won't have any market economic up or any updates from Paul. So hand it over to Zane. Thanks.
Yeah, thanks, Grant. So I'll clarify the technical sell on the bank. So it's just purely looking at technical charts from the 2018 until now. When I looked at there was a recent breakdown because price was consolidating since November until now recently, and then there's some weakness. Also, we look at the deviations from the long-term average, which is the 200 period MA. Also hit some resistance levels in the past where we saw some pullback into the price. Yeah, so that explains the technical call. Yeah, so I think with that, I'll share my screen to do the TA questions. Okay, so first question is on Oitech. So I think for Oitech, price there's a bit of weakness recently. I think the uptrend, this uptrend over here, we've seen a breakdown of this support line previously around this 120 level, and price actually retesting this 105 previous quite a strong resistance level in the past. So there could be some bounce over here, but I think they'll probably form a lower high. Some short-term resistance levels for now will be around like $1.13, which is also a breakdown of the swing low over here as well as the 5-day MA. So that's near-term resistance, and next level will be around 120 about there. Yeah, so there could be some bounce here, but I expect a lower high to be formed with the recent breakdown of this uptrend support line. Okay, then next question is on Bank of China. So Bank of China, I think is still a very steady uptrend over here, trading in this uptrend channel recently. So new highs formed recently as well. So I think we could still see the uptrend continue. Near-term resistance, next one is around like 475 perhaps. If it does retest the channel resistance again. Okay, next one is on CK Infrastructure. So for CK Infrastructure, I think still quite overall quite range bound. Price finding some resistance around $55, which was this consolidation over here that then pull back. So I think there could still be some slight consolidation taking place. Roughly between like 52 to 55 this area for the time being. Yeah, since it's still quite a lot of resistance. And price was able to hold some breakout level over here, $53.50 over here. Yeah. Okay, then there's a question. It appears there's the current resistance price for OCBC is around $16.50. Any reasons for this? Yeah. So for OCBC, we look at the chart. Recently, was trading in this uptrend channel. There was and then last week, I think there was a breakdown over here and increased volume as well. So after $17 was a key level which was very resistant into support. So with that, with the recent breakdown, there's likely to be some resistance over here in the short term. Yeah. So just short term, there's some change in the momentum. Then there's also a question: what's the entry price Capital DC REIT and CAR. CAR, I assume is Ascenders REIT. So for Capital DC REIT, I think generally is quite range bound. So some key resistance, I think will still remain around 227. Some entry price in the short term, I think will be around this around $2.14, $2.15, this area where price actually there's a breakout of this resistance level. There's likely to act as a bit of support in the short term. I think there could be some short-term consolidation taking place over here, where the price ran up over 2 to 3 days. Then the moving radius is also around the 210s. This kind of support level over here. For Ascenders REIT, I think there's entry price will be closer to about 257, 258 over here, where price was previously in this very long consolidation period over here. Then there was a breakout recently. So I think here will be if it does do a pullback, this could hold as a bit of support. Okay, next one is on some Hong Kong counters. First one is JD. So for JD, I think overall still looks like a bit of a consolidation over here. But price, I think this was after earnings, there was a bit of pullback towards this price resistance and continue to form a bit of a higher swing low over here around 155 and a bit of rebound taking place. So I think we could see continue to see a bit of rebound taking shape this week to maybe perhaps retest this swing high around 180 over here. Yeah, where there was a swing high before the earnings pullback over here. So overall, it still looks okay. I think after the double bottom over here, 128 price consolidated at this neckline resistance around 160 and moving sideways. Then following a breakout here, still holding as a bit of support. So we could see a bounce taking place. The next one is on Alibaba. So I think for Alibaba, looks like a bit of a consolidation taking place as well now, since volume is also coming down and higher lows supported along this upward support line. So current support is around 130, around 132 perhaps. Resistance is still above 140. And so I think for now we might still see a bit of a consolidation as long as it doesn't break below this upward support line. I think there's still a chance for price to go higher since overall it's in uptrend. Above 140, next key resistance I think will be around 150. Around 150. Okay, for Ping An Insurance, I think price is still continuing on the recent upwards momentum over here after a bit of consolidation sideways between 45 to about 49 recently. Price attempting to break above this level today. I think in the short term wise, there could be still some resistance, 51 to 53, this area that some quite a strong resistance. So I think upside move could still be quite slow. It could still move up a bit slow, then do a bit of sideways again. But overall, the upwards momentum since middle of January over here is still intact over here as of now. Yeah, so maybe a bit of upwards move to 52, 53, then we might see some sideways consolidation for Ping An Insurance. Yeah, so then there's a question on the CapitaLand and Mapletree REITs have an uptrend move, but not others. Is this move sustainable for next 3 or 3 months? Okay, so maybe I'll just look at the overall REIT index. So if you look, so for this, I think overall it's still on a downward trend since September over here. So I would think in terms of general REITs, there might be still a little bit of a move to maybe test like this 1030 resistance level for the REIT index over here. So then afterwards, you might see a way of sideways again. So I think overall will still be quite slow in terms of the move. Yeah, then for some of the leaders like the CapitaLand as well as Mapletree, also quite near some of the resistance levels. For example, now CICT is around $2.12. The previous high around here, 212 to 216 was a resistance area. So I think we might see a bit of a consolidation again afterwards. So perhaps a little bit of upside left for in terms of the REITs in general. Yeah. Then maybe continue a bit of a sideways consolidation again. Okay, then there's a question on ESR REIT. So for ESR REIT, I think overall it's a bit of a downtrend for now. So I think most likely we'll continue to see the trend continue the series of lower highs. So previously it was around 30 cents, then around 29 cents. So I think for now, some resistance will likely come from this area again, around 25 to 26 cents area. Previously it was a support over here. Yeah. Okay, then some questions on Yangtze Shipbuilding, Parkway Light Rail and Singtel. Yeah, so for the first part for Yangtze Shipbuilding, I think overall, still weakness. If you look at the longer term trend, it's still below this blue upward support line. Short term wise, a bit of a double bottom being formed over here at 224, still holding, and but still finding resistance from these 5 and 10 MA levels. This is around 232 to 235. Also, at 235, there was also a breakdown recently. So there could still be some weakness if it stays below this level. Yeah. So maybe still a bit of a lower high trend continuing on if it finds resistance below at the 235 level. So we might see a bit of consolidation. Yeah. Then for Parkway Life REIT. Okay, Parkway Life REIT, I think overall, for now, it's likely to be trading within this uptrend channel over here in blue. So hitting a bit of a resistance area currently. So I expect to see a bit of a slight pullback or consolidation again. Near-term support level will be around like 394, 395, this level. Okay, then for Singtel, I think looks like still doing a bit of a consolidation over here. But good thing is still higher lows are being formed from this 319 and 325. And I think last week there was a 327 window. So I think overall still looks like consolidating over here sideways since middle of February. Key resistance to break out to break out is still 342. Yeah, so I think for this week, I think it's still likely to move sideways for a while. Then above 342, the next key resistance will probably be around 348 and 355. Okay, then Namchong, I think overall looks like also in a bit of consolidation. Good thing is still the uptrend over here is still intact as previous 50-cent resistance level still holding a support. Then currently the range resistance around close to 58 cents. So over here now is testing this area again. There might still be a bit of resistance. So could still have a bit of pullback in the short term, but some positive thing is that our price is still forming a series of higher lows over here along the short-term moving average, above the short-term moving average, just like the 510 as well, 510 MAs. So if there's a pullback that confirms that contains that holds the higher lows around like 54 to 55 cents area, then we might still see the price try to attempt a breakout this current range consolidation. Okay, then for Baosti, I think price is, I think there's a break of this long consolidation between like $1 and $1.04 last week. So I think that overall is also in an uptrend. So there could still be upside to actually retest some to actually hit the next target level, maybe closer to 110 next. Yeah, since there was a breakout after this long consolidation. Next one is on Franken. So for Franken, I think a bit of a rebound, but from this upward trend line support over here, as well as some horizontal level in the past, around $1 level. Then, but overall still in a bit of a downtrend, so I expect some still facing resistance in the short term from the breakdown of this $1.10 level over here. Previously a range consolidation, now retesting. So maybe still a bit of a consolidation might take place over here. Also this downtrend resistance line. So over here might still be some resistance, then maybe trading sideways for time being, maybe like 105 to 110 levels. Okay, next question is on FLCT. So Fraser Logistics and Commercial Trust, price breaking above this recent level at 90 cents. So I think overall it's a bit of a downtrend. So still likely to face some resistance next recent level at 92.5 cents as well. Around 95 cents will be also a key resistance. So might still go up a bit higher, but some near-term resistance are these two levels. Yeah, then afterwards maybe we see the price goes a bit of sideways again. Okay, then next up is Centurion. So for Centurion, I think overall looks to be in the short term looks to be trading within this blue uptrend channel over here. Yeah, so recently we the previous resistance at this $1 level here we test still holding a support. So looking to do a bit of bounce up. But 109 over here near term resistance. So I think will be still quite choppy, a bit sideways as it moves within this channel itself. So here might be around here will be near the resistance area. So there could be some pullback again as it trades within this trend itself. The next question is on Propnex. Yeah, so for Propnex, I think still overall still maintaining the uptrend trend over here, upward support line. Also a bit of a consolidation recently. Yeah, still 115 still facing some resistance. I tried to break out, but came back down, still having high volume. So maybe for the short term, maybe still a bit of consolidation where I think support will be around 109, 110 over here. So as long as all these covers a horizontal level as well as upwards support line over here still holding, then I think the trend is still intact over here right now. Okay, then next question is on Bumi Tama Agri. So for Bumi Tama, I think first is on an uptrend. Then recently there's some price regaining back some momentum as it breaks out of this downtrend channel over this channel over here as well as this level of 84 cents. So previously there was a support breakdown level and price above it doing a retest. So if it can hold above this level, I think we could see a bounce up again to test some of the resistance level close to like 90 cents, the recent swing high over here. Okay, then some other counters is Tesla. So for Tesla, I think price is broke below this uptrend, this upward support line over here last week around 260s. Then went on to fill with this price gap over here. Yeah, it's holding as a bit of support at 218. So as of now, price is still below some of the short-term MAs, which is the 10-day MA, which over here previously acted as a bit of resistance. So I think near-term resistance will still hold around this 260 around 260 to 275 area over here. There could be still some quite big resistance. Yeah, since overall the counter is on the downtrend over here. So maybe a bit of bounce then still facing a bit of resistance in the short term. Okay, then for NVIDIA, I think price is overall trading within this downtrend channel over here, doing a bit of rebound. But some short-term resistance, I think, coming up is quite near, probably 124, 125 over here. As it retests this blue uptrend support line breakdown over here. Then also next key resistance is at 130. It goes a bit higher. 130 is also a key level because previously price was trading within this this range consolidation area itself, and it was quite a strong support that price was finding resistance and support from. So this is also next key resistance. So maybe price will still go a bit higher, but I will expect some near-term resistance at 125 to 130 in the short term. Okay, then for Broadcom, I think, for Microsoft, I think price, it was a breakdown previously on this 385 level, but tried to recover above it over here, but so let's see, I think could be some resistance at 390 over here from this trend line, as well as also is quite near this 20-day moving average or reach 396 as of now. So previously over here, price retested some resistance, could face the same thing over here. And also there's a swing high resistance over here as well. So this 390 to 400 area, I think will still hold as a bit of resistance. So price might do a bit of a consolidation over here in the short term. Some is holds the recent lows at 377. Then next one is on Broadcom. Broadcom retested this upward trend line support in blue, and also was this previous horizontal resistance over here at 183 that filled the gap. Currently doing a bit of rebound, but I think could still be some short-term resistance around like 200s over here. This 202 was the 20-day moving average resistance over here. Yeah, then also there was a bit of breakdown previously around here 200 as well. The support. This was support level, then price came below, went below, and over here there will likely be some resistance still. So maybe a bit of sideways taking place for now. The next question is on land lease REIT. So for land lease, I think overall price is still trending down now, possibly in this channel over here, this downward channel. So perhaps some resistance could come around 52 cents in the short term, where this channel resistance also in terms of horizontal levels. Previously, price was consolidating sideways over here. In January, then there was a breakdown. So over here, some resistance where price could come back down within the channel itself. So maybe could do a bit of pullback at this 52 cents area. Okay, next one is on American Express. So for American Express, the price has actually pulled back quite a bit over here. Come back to retest this previous range resistance level around 250 in the past. So in the short term, there could be some slight rebound, but I think there's still quite a lot of resistance in the upside. Yeah, so currently the first resistance could come around like around 270 level, where previously this 10 MA level, which this red line, you can see when the price during this downtrend, it acted as a bit of resistance. So there could be some resistance over here. The next one will be around like to around 280, which was also a previous deep support level over here in the past. Yeah, so that I think some temporary rebound then could face some resistance again. Yeah, IIPR is the innovative industrial property. So I think for this counter, generally, yeah, yes, moving quite sideways recently. So I think looks like that will still continue for a while. Yeah, consolidating between 69 to 75 dollars. So if it still holds this area, we might still see price moving a bit sideways for now. Okay, next one is on realty income. Yeah, realty income looks to be in this short-term uptrend channel over here. So I think support area will be around 55, 56. This area where price actually broke previously broke out from over here in February. So this could be supported around here, then resistance will be around 58 onwards. Yeah. So I think we'll still be trading within this channel itself. Yeah, then next question is on Ford. So for Ford, yeah, Ford is quite sideways over here. Yeah, I think generally for now it's probably trading between like 920 to about $10, 1020 this area over here. So I think I still think for now maybe still quite sideways. Yeah. So overall previously last year it was also quite sideways. So I think we could still see the range continue a bit on from here. Okay, the next one is on Bitcoin and Ethereum. Yeah, so for Bitcoin, I think for now, I think it looks like a bit of a consolidation. Key support is still holding at 78K. Then for now, it's just sideways consolidation. Resistance could be this trend line around 86K. Yeah, so it looks like price is forming a series of lower highs as it bounces from the support at 78K. So things 86 would be a resistance level. Yeah. And price could be just doing a bit of sideways in the near term. Yeah, then for Ethereum, yeah, for Ethereum, I think overall there's some weaknesses. It's quite weaker than Bitcoin. There was a breakdown of this upward trend line support in the past over here, around 2,100. So price is moving sideways. I think that we could still see the downtrend continue if there's a breakdown below, like the recent lows at around 1,800. Then next support for that will be next support for that I think will be closer to 1,550 level. Yeah, in overall it's trading in this downtrend. The next question is on Golden Agri, Doma Strategic, and Thomson Medical. Yeah, so for Golden Agri, I think this counter was quite sideways, so rebound from 23 cents. Also after a consolidation at 25.5 cents, it moved upwards. So I think could come back to the next area at around 26.5 cents to about 28 cents this area. Yeah, since overall 28 cents also quite a strong resistance in the past, so likely just moving sideways afterwards. And then for Yoma, I think Yeah, price rebounding from this trend line support 0.074, then currently I think moving sideways. Yeah, so I think we just remain around here for now. Support is currently is about 0.077. Business upwards would be I think 0.083 to 0.085 this area. So I think could see some sideways consolidation here. And then for Thomson Medical, I think overall downtrend over here. And I think could still see lower lows since the recently break down 0.043 this level. Next key support, looking at historical levels, I think could be 0.03. Yeah, these lows in the past, which was, I think was the 2020 March lows. Then there's a question on Hur. Yeah, so for Hur, I think price currently doing some rebound from this support at 41 cents. Also looking at the short-term price action, there was a consolidation over here for 40, it broke out this 45 cents area, currently moving a bit upwards. But I think there could be some resistance around the 50-cent mark. Yeah, so this 49.5 cents area previously was quite a strong resistance, price broke out. Then afterwards, a strong breakdown over here on volume. So over here, that I think here might face a bit of resistance, 49.5 cents. Yeah, also I think when I was looking on the weekly, there's some moving 48 to like 49 cents. This area could pose a bit of resistance as well. It broke below the 20 MA, then currently doing a bit of rebound. So I think if it hits those levels, I think we could see the price pull back a bit. Okay, then for Singpost, I think looks like nothing much, just very sideways overall between 54.5 cents to 57 cents. So I think just moving sideways for now, yeah. Unless there's a breakdown, 54.5 cents, then the downside next support will be around like 52 to 53 cents. Then above the 58.5 cents or so, next one is closer to 60 cents. So I think nothing too much, not very volatile, yeah, just moving sideways also. Okay, T for the three local banks. So this one I will just call it from the short term. So for DBS, it was a breakdown last week of this. Yeah, breakdown of the $45 level. So previously 45 was a strong resistance. Then after the earnings came out, there was a gap up, then held as support, moving higher. Then afterwards, it's a breakdown again on high volume on Tuesday. So I think 45 to about 45.80, these areas could be a short-term resistance. Yeah. Then I think then currently it's doing a bit of a sideways over here. So we might see some sideways consolidation. But if there's a breakdown below this $44 level, then we might see a further pullback. So for now, it looks like a bit of a sideways. Yeah, next support level for DBS, I think will be around closer to 43 this swing low, which was also like our previous resistance level. Yeah, then for UOB, I think similar, quite similar. Previously, the $38 over here was a resistance and breakout. Price was consolidating above it. There was a breakdown on Tuesday, high volume. So I think over here 38 onwards will be the short-term resistance. Yeah. Then support wise will be around the recent swing around 36.50. Yeah, then next support level below will be like 35.80 about that. So it could be a bit of a sideways consolidation over here for now. Then for OCBC was similar after a breakdown of $17, previous resistance, holding and support. Then was a breakdown last Tuesday on increased volume as well. So currently, we'll be moving sideways. Some resistance will be like this $17. And I think below the current swing low of 16.40, next support I think will be around like $16 over here. So for three banks, I think this could move a bit sideways for now first. Yeah. Okay, then our okay, next question is on JXN, LE, and TFC. Yeah, so for JXN is Jackson Financial. For this, looks like a bit of a consolidation could take place for now first. Yeah. I think we're likely to still form a lower high. Previously price was at this 97 level, then it's a series of low highs and lower lows starting form. So I think for now, short-term resistance could be around like 86 over here. Yeah, when price form a swing high over here, then came back down. So might see a consolidation between like 79 to 86 for now. And then for Ally Financial, I think it looks quite sideways. So this 33 area was previously a strong support. Currently holding sideways over here. Yeah, so I think we'll likely see some sideways going ahead. Resistance will be this 35.50 level also. Then the last one I'll take. Last question I'll take for now is Trees Financial. And so for this, I think overall very range bound. Recently, below this, there was a consolidation between like the 45 to $48, and there was a breakdown recently. Then came back to this support A level over here around 39 to 41 over here. So over here we could see some slight rebound, but I think probably a lower high will be formed. Key resistance for now I think is around 42.30 this level. So maybe some consolidation rebound, then a lower high could be formed around here. I think that's it for the TA questions. Thanks.
I guess that's pretty much it. We don't have any other question coming in. Yeah, so I guess we're just gonna wrap up the session. So thank you for tuning in. Again, apologies. I know some of our colleagues are on leave, so if you have other questions specifically targeted to them, feel free to post it in our P3 community, and we're gonna be taking the question from there. Yeah, so I guess that's all. Thank you for joining us. We'll see you next week.